Good evening, Wizards, and welcome to a very special episode 30 of Wizard Wednesdays. Now, a lot has been going on behind the scenes, and a lot has been going on from the front end in both the Wizard aspect and both the market aspect. We are seeing so many things occurring right now within the market and so many things occurring within the CryptoWZRD family. It's time to start sharing even more with all of you. So to celebrate 30 weeks of Wizard Wednesdays, 30 weeks of content for you all, and also coming up this Sunday, the 30th podcast as well, we decided to give you guys even more and a little extra just to keep you going as the platform launch arrives. Now, if you haven't seen already, we will be doing today's Wizard Wednesdays via the CryptoWZRD password page. Now, we've fully revamped this page for all of you. We've got a huge amount of content thrown onto there as well, alongside other downloads and charts, which we're going to be going through now step by step. I have written many different articles for all of you. We've got downloads that we've all made in-house for all of you. We've even got the launch date officially announced. Now, as you can see, the first thing you'll notice is, of course, the CryptoWZRD launch date video. We've got a little note in the corner as well, just letting you know that we will be launching on October the 31st. Now, if you haven't already seen the video, I just want to quickly play this for all of you and show you what is going on. We are so excited here, as you can probably tell from my voice. Things are beginning to unfold, not only in the markets, but from CryptoWZRD as well. It's all beginning to unravel, and this is just the early phases. The same way we're in the early phases of the cryptocurrency market, you are essentially in the early phases of CryptoWZRD, and what you are now watching is the infant grow and mature into this ripening adult it's going to become. Now, first of all, let's just show you this just to get you guys in that zone. And again, if you haven't already subscribed to the YouTube, guys, make sure you have now. We're almost 10,000 subscribers deep, and I would love to see that 10,000 number before we actually launch. We are growing at a massive rate. There are so many of you on board now, and I cannot wait to show you what's in store. So if you haven't already seen it, just showing you this. So there we have it, October the 31st. It's the official date. It's now been stamped down, and we are working towards this final date. Now, the first thing you'll notice as well on this page is it's actually powered alongside all of the tabs here as well. Anything you need, guys, in terms of the podcast on Spotify, the YouTube, the Twitter, the Telegram, the Instagram, and Facebook, anything you need is located in this bottom left-hand corner. Essentially, when the platform is out, it will be the only place you need to actually gain any form of information, any form of education. You will never need to leave your platform. It will become your new home for cryptocurrency, and there will never be a need to find information or sources of information elsewhere. So we've decided to embed that within the password page itself and make sure you are actually already learning and adjusting to finding absolutely everything you need on the password page. Now, I've never seen a password page personally with this much information and content available on it. So it's designed to keep you here. It's designed to keep you secure and safe and feel like everything you need is just a stone's throw away. Now, you'll notice here it's powered by the Wizard Group. Now, there's going to be a lot more stuff coming on the Wizard Group soon, and if you haven't already seen the Wizard Group password page as well, essentially everything you see here falls within the Wizard Group umbrella. Now, we will not be going into this too much further yet, but coming over the next few days and weeks, especially leading up to the launch, I'm going to be showing you alongside the team all of this stuff here, what this actually is, what it means, what's in store for all of you. There is a huge amount of content coming forward for all of you, and it spans much further than CryptoWZRD, as you can see from this. So any information you need from the Wizard Group aspect as well, guys, the Instagram's here, the Twitter's here, absolutely everything you need is here. So if we just go back to the platform very quickly, you can go to the About page over here, a little bit more information, just letting you know, are you ready? The Wizard platform is coming. Going over to content, this is where things get a bit interesting. Every single Wizard Wednesdays you ever need is located right from this tab here. From episode 29, of course, episode 30 will be here as well. You need to understand this will be coming forward soon. Going over to the next page, you can just continue scrolling through. It's all here for you to see. Going over to Wizard Podcast, it's all here for you to see. Going over to the breakdowns, this was newly added the other day as well. You've got all your breakdowns here, anything you need going back in time. If you wanted to see the 14,000 reversal call, if you wanted to see the other videos, if you wanted to see the $10,800 reversal and any form of update, or you just want to brush up on your analysis, it's all here for you to see. Very convenient and very easy to obtain. If you go over to the downloads page, this is where things get quite interesting. You'll notice straight away there are 6 books available for you to analyze and read and get into straight away. These have all been written. Some of them are a bit older and they've been updated. Anything you need, you've got the trading checklist right over here. All you do, guys, just click it if you're on desktop and it will open up a new tab for you. Go down, you've got your trading checklist there. You can print this out, stick it on your wall, whatever you need to do, it's available for you to utilize. I've got a bit of information regarding the market cap and just really trying to break the status quo and show you there is a lot of other stuff going on in the market and giving you a different ideology. This will actually help you with your overall trading as well. The articles on risk, the cheat sheet, and even one of the biggest articles. Many of you have been anticipating the return of this article, The Rise of the Phoenix. This is over 8,500 words discussing the economy, the upcoming recession, how Ripple is potentially going to be involved in the infrastructure of society and the overall monetary banking system in the future. There is a lot to get through, and I assure you, after you've read this, this will truly change your outlook on life and the market overall. So make sure you get stuck in. There's a crazy amount of content there as well. Not to mention desktop wallpapers, phone wallpapers, absolutely everything's thrown in here for you. Some Battle of Wizard ones. You've got, the Wizard group, the Halloween themes. We are launching on Halloween, so we have to keep that Halloween theme going as well. Simply download them there. I've got them on my desktop and I've got them on my phone already as well. So there's a huge amount of content for all of you alongside the charts as well. And just something to give back and say thank you for the loyalty and the community we have grown over since February. The size of this community is now overwhelming, and we cannot thank you guys enough for absolutely everything you're doing for us. So this is just a speck of what we can give back to all of you for the time being. So let's actually go over to the charts, have a little look. Again, you can do your analysis here now as well. You've got BTC, XRP, Ether, and LTC, very similar to the theme of the actual Wizard platform. So this is all here for you as well. I haven't actually done the Ether and LTC charts, as we'll only be doing BTC and XRP. So all I've done is I've transitioned the main key levels. I've actually scrapped all of the messiness from the other key levels so we can focus on the existing price action. And alongside this, we can actually reanalyze and utilize this free space to identify any other potential, I guess you could say, key levels or anything over there as well. So it's essentially a fresh analysis besides the key levels. So one thing that you should also note when it comes to these key levels, when you go onto TradingView, you can actually use the lock feature, and this will stop you from accidentally moving or adjusting any of your key levels. So when it comes to crucial trend lines or crucial levels, just throw on the lock sign, and then it ensures you will not, make an accident or quickly move it out of place, and then you cannot reverse it. That's something I personally do, and this way they're secured in stone. And the same goes for the XRP charts as well. So going over to BTC, we haven't really seen too much movement just yet. Not much has really changed in the market, but it doesn't mean we cannot actually utilize this current information to understand where the market could potentially be heading next. So as you can see, after scrapping all of these key levels, I'm actually focusing more now on 9,300. That's one of the closest extended zones. You've got 8,500, which we've actually broken, but we have also got the 7,700, 76 zone located just below as well. So from a weekly perspective, it is still a bit early to really gain the overall weekly understanding of the candlesticks, but it is still giving us a very clear sign of what's going on. I've conveniently provided the $6,000 region just below, and it actually provides a bit more of a cleaner format for all of you as well to really understand what could be going on here behind the scenes. Now, if I just whip up this trend line very quickly, let's just make this thick. Let's change that to purple. The first thing we need to pay attention to in the event of a potential reversal to the downside is, of course, this trend line here as well. There are many different confluences aligning on this chart, and the first thing you'll also remember is this trend line here as well. There's essentially a confluence double crossing point. Now, it doesn't really mean too much right now, but as you may remember from the prior Wizard Wednesdays. You've got 1, 2 potential third bounce over here. If this does actually start falling over this week or the next week, then it perfectly fulfills a trendline retest, even if that leads up to 2020. Even if we end the year at this price, it only means 2020 is going to absolutely rocket and parabolically rise us towards $16,000. But for the time being, I do believe we could actually end this year still positive. So ignoring what everyone else is saying, there's all kinds of different theories going online, all kinds of different ideologies. Some people are now saying buy, some people are now saying sell. The goal here is, although we exited, or at least took the majority of profits from our main trades from BTC up here, and of course from XRP at around the 31 cents region over here. This is the weekly candle, so it doesn't look realistic, but once you go to the daily or the 4 hour or 1 hour, you understand that we actually caught this trade from 31 cents. So the overall theme, just to refresh you, is although we've taken the majority of profits off the table on these trades, this whole region for us is more to take a little bit of a trade, a much smaller trade, as you would have seen yesterday. Both trades should now be an instant profit as well, which we'll be getting into shortly. So with these trades, all I've said is only do about 20 to 50% of what you would normally do. You've created and captured a phenomenal movement from 10,800 to 8,500. You've caught a move from 31 cents pretty much down to 24 cents. And if you actually rode that wave down, around 21 cents. So we've had some very nice trades. And the goal here is to not jeopardize those profits and secure absolutely everything we physically can to ensure we are not obliterating those profits. We want to be ending the year very profitable. And if you've been following the calls, I can promise you it's been over a 95% win rate over the course of since February, since we actually started. We've only had, honestly, to be honest with you, around 7 to 10 losses, I think, altogether collectively out of many other trades. And when I say losses, I mean stop losses that have actually been hit, a trade that's actually gone against us and hit a stop loss that hasn't been in profit. If you want to obviously count stop losses hitting break even or stop losses hit and a little bit of profit, then yeah, the trades may not have worked out, but we have not actually ended with any real significant losses. You've probably had 40, 50 trades, maybe more, to be honest with you, and out of that, only 7 to 10 maybe being a loser for me is a very high win rate, and maybe even more, to be honest with you, in terms of wins. If you actually capture all the intraday trades as well, then there's been a phenomenal amount of wins. So you should, if you've been following the Wizard guidelines on risk management, on the trade setups, the trade managements, you should be ending this year incredibly profitable no matter what happens from this point onwards. And this is the goal of trading, to always have that longer term outlook. If you're focusing on the short term, let's say you have a losing month, if you actually account for the rest of the year, you could still have a very profitable year. And that's always the outlook as a trader and an investor you should have. The same goes for crypto. If you measured 2018 as anything to go by, you would have had a pretty horrific year. But if you were a 2010 investor, you would still be in phenomenal profit and you would still be very well excited for the future that's coming up. So you always have to focus on that longer term look and focus on what is actually coming in the future. Now, this BTC weekly chart right now, we've broken through $8,500. That weekly candle closure below, for me, almost added an extra confluence that we could be gearing up for the next movement down. We've broken through, and as you can see from this weekly very perfectly over here, we've retested, pulled back and touched that zone, but we are currently wedged in between this region here. And that's exactly why we try to capture a short from this zone and not from the middle, because this is what we call no man's land. And if we go over to the daily time frame over here, if I actually scrap away these intraday levels for a second, you can see from key level to key level, we've simply broken through, we've pulled back up and we've retested. Now, there's a good amount of resistance here, and this is why we're not focusing too much on the intraday time frames right now, because they're causing a lot of confusion. You've got a key level here that's obviously volatile and we're bouncing back and forth between, and essentially this is aiding our bias right now because we've broken back below, we're rejecting, it could aid a fall lower. But at the same time, you've got this zone here from an intraday perspective where you've broken through, you've retested as support, which was once resistance. It could look like it could blow higher. So it's a bit messy, it's a bit sloppy, but all I know is if you captured the BTC short from exactly where it was given, around here or even down to there, you should at least have your stop losses in profit or break even by now. Because of the region we're at and because we're essentially position adding, because we've actually shorted already, and if you have it running, adding a position here is simply adding to your short position. So you need to be securing those trades by all means necessary, and your stop losses should now be in profit for both BTC and XRP as well. Now, XRP looks like it could be going in for a nice little retest, which we'll get to in a second. But as you can see overall, I need to sort all these out as well very quickly for all of you. We will just sort that out from there. We do not need to focus on the extensions too much for now because we've seen where they all align anyway. But let's just get rid of these, 0.618, not get rid of that as well, get rid of this, keep it nice and clean and nice and simple. So once we get rid of the background, do not need a background, highly distracting by all means necessary. You can see the Fibonacci's are aligning and we should very easily be back at around 0.256 to around 0.26 altogether before actually identifying the next move lower. So just be prepared for this potential movement, but then understand the Fibonacci's then align very nicely with the downside region of around 0.235. So we've got a nice little setup on our hands. If you're already in this trade, just keep your stop losses around this region. If it comes up and touches your stop loss and you're closed out at break even or even a little bit of profit, simply await another bit of wick fishing around here and we simply enter short again. I have no fear, I have no worries with stop losses being met, and this is something I'm going to continuously embed within all of you. The more those stop losses get hit in break even or in profit, you know the market has gone exactly to where you've anticipated a potential risk to occur. You've cut the losses short or you've had no loss whatsoever, and you can then reevaluate and enter the market again from a better position. Now, extending this out as well, another little cool thing to mention, let's just make this nice and thick as well and make this purple. You can see there is a bit of a trend line occurring here as well. So from a perspective of this, we should hopefully remain within line of this as well and just slowly roll over and gear up for the next leg down. When you consider that we also have this huge trend line on the daily, not to mention the weekly trend line, which we'll get to as well, there are some confluences in play here and we are forming another counter trend. So gearing up here, as you can see, broken, we've now come back down. If we break this, we should see a nice retest to confirm the break of 0.253, breakthrough, retest, and then start gearing down for that next move lower. Regardless of all of this, however, no matter what you're doing, you should, by all means necessary, guys, you should be gearing up and buying for long-term investments regardless. As you can see from the intraday perspective, we've broken above, we've retested. This is simply an additional trade, a very low risk trade to hopefully just make a bit more profit. But if it goes wrong, I want you guys out of this straight away, because if it breaks this trend line, we're looking for retests around here and we are going long. That is why we have to be cautious, because from a long-term perspective, if you've seen the other BTC chart with all the arrows on the Bitstamp chart, you would understand we're at a very critical point in time right now. And using this zone here, at least the daily does aid this confluence. We've reversed precisely from here. That's why stop losses should be around this wick, but also from a daily, this is where the 78.6 could come into play. 1, 2, 3, maybe this could happen in the next few days even, but just have that there as a precaution. Set the stop losses nice and secure and understand we could be focusing on this movement. But regardless, the minute we called that BTC trade in particular as well, if you notice, the minute I said shorts active, we absolutely melted. So we fell from around 8,500 down to around 8,200. So $300 movement from the exact point of calling that works out very well, to be honest with you. So very excited to see that all happening. The daily perspective as well, just showing how the key level bounced and bounced. Reversal here. Understand there could be some wick fishing, but if you drag that zone above, you can currently see there's been a failure to actually break above that $8,400 zone, and even more precisely around $8,330. So it's all moving very nicely in synchronization right now. And if we go over to this monthly time frame, very rare outlook, we rarely ever look at this, but this should show you more clearly now the trend line that's been broken. Although we will not really use that too much as a guidance, if you do see this here, it does correlate with around $5,500 as well. If we were to see that drop from this exact point in time over this month in particular, you can see this huge reversal, a huge failure. It's not likely we're going to be pulling up just yet with all of these wicks forming. This is why I am very still predominantly focused on that downside bias, because there's so many different risky factors in play right now. And then looking at this, obviously we've broken above, we're now retesting this as support as well, but with such a Goliath amount of bearish candles, and looking at this confluence exactly down, $6,000 right there, $5,000 right there, 5,500, sorry, it's looking pretty nice. Inverse head and shoulders, the head and the potential shoulders here. Just dragging this just for visual perspective one last time from around the point of this reversal, you can see it's nicely in line. And if it does happen, it aligns exactly with that final weekly or monthly candle as well. So there's a lot of different confluences pointing to this downside factor. Again, just disregarding what everyone else out there is saying for the time being, focusing on ourselves. Do not worry what other people say. Let the charts talk. Even if other people are right or wrong, it doesn't matter. We are not here to beat others. We are not here to beat ourselves. We are here to become the best version of ourselves, and it's as simple as that. So weekly perspective, again, looking pretty good, guys. It's all aligning quite nicely. I would like to see a bit of an indecisive or even a closure like this is still pretty good for me. As long as we're below this boundary of around $8,500, the factors still point to the potential downside. So we need to be careful. The liquidity of BACT and the actual volume as well overall has been minuscule, absolutely minuscule. And we're sitting from BTC dominance, we're still around 67.6%. So it hasn't changed too much, and it isn't really dominating the market too much, but it is showing that it is still significantly higher. So the majority of this analysis does have to follow BTC to some extent for now. But as you can see, if we maintain this level all around here, then guys, instant slam down, all of the buyers will be wiped out, and it's a win-win situation. But yet again, stops here. If it gets wiped out and it spikes a little higher, for example, even up to here, you simply enter from there instead and get closed out. So it's always good as well to be on top of the markets, have the charts nearby, have your phone open, just so you know in the event your stop losses do get closed out, you've taken no loss, you've taken a bit of profit, and you're out the trade. So it's not just about giving you these calls, guys. It's about showing you how to actually manage risk, how to understand this, how to close out a trade without a bit of a loss. You know, many people out there, they just place a trade, they leave it, and they hope for the best. But why, if the market dynamics change in such a volatile market, would you sit there on your hands and simply wait for a move to happen? It's in your best interest to be active and volatile and dynamically moving, as volatile and dynamic as the market is. So again, overall, just nice little movement. There isn't too much going on right now. You have seen that significant reversal, which would have probably wiped out the premature shorters. And this is why I said in the Telegram, we are not going to be, and I said it on Twitter as well, we're not going to be entering BTC short here, because the possibility of this key level just above is too dangerous. And now that we've seen the wick fishing, this does provide the bias further that it should have actually wiped out the shorters, and it could be coming back down. And not just this, there's something, I believe it was on BTC and XRP, but this is also a good thing to mention as well. You've got a trend line here from wick to wick, which has now been broken, which also correlates at the bare minimum with at least a retest of around $7,800 to $7,700 again. If we see a lot of wick fishing down to this region, but the candle closures remain in line with this, then we will start gearing up for longs, because again, that's a shoulder, that's a head, and there could be another potential shoulder forming within this zone as well. So overall, even short term, I believe the bias is going to be down. Even if you capture a quick move, let's say from 8685 down to the likes of around 78, you've almost captured a $1,000 movement for the sake of it as a bonus. So we're focusing on these downside targets, although you know my general rule of thumb is to focus like this, from the wick to body or body to body. You could even do this. I believe this would work as well. So there are many different confluences coming into play to show there should be a downside retest of this trend line. And that's why I like trend lines actually being broken against our current trend, because if you drag this down, that is a nice $7,800 movement right there to that region exactly over there. So there's a lot of nice confluences, and even if you're looking at a bearish bias but this trend line like this breaks, it just means it's more likely than not going to come down for that retest first. So hopefully what we see is not just the push down to $7,800, but also a breach below, a retest of the trend line, or a retest of such a crucial level like this. As you've probably seen by now, these key levels, every time they're broken, they usually come back around for a retest. So although this level has been broken and we haven't seen the retest just yet, I do want to focus more on the downside first. But I still believe even if we see that $9,200 retest, we should be able to capture that movement, because if our intraday trend line breaks, let's just say this one here, we see a retest of this region to this region, we capture the similar movement. And how we would capture that movement and know where to go, simply by plotting this Fibonacci in advance. All you can see here, you've got around 284 and 0.33. So overall, there's a nice little confluence here. And if it breaks above long entries, we capture the movement. There is not going to be a loss on this trade because you're already in profit from the shorts. And this is what I'm trying to show you guys. We can switch bias in a heartbeat and make money. We're not here to be correct. We're not here to show the market we're better than it. We're here to show the market that no matter what you do, we will improvise and adapt to how you move, and we will capture those same movements. The market is manipulated. It's controlled by higher beings and higher entities. I'm not talking aliens. I'm just talking people with significant wealth, people with a significant influence on the overall cryptocurrency space. It's not us that has the influence, we must simply follow their movements. But in saying that, let's just get rid of this as it's not needed. If we did see that fib, by the way, that would correlate perfectly with 20 and around 15-16 cents as well. So just notify and understand that this region here, I've extended it down to 15 cents in the event we see BTC at $6,000. And you've of course got the 20-cent zone here as well, which we fell just short of, which does lead me to believe there may be an extra little push just to see if this level can sustain as much as it wants. But looking at this confluence as well, counter trend line broken. Extend this a little bit higher up to that wick as well, even to the body over there. You can see we've pretty nicely retested this zone, broken the counter trend. Zoom out a bit. As you can see, getting rid of, actually no, we'll leave it all there. So you've broken through, you've retested, key levels also aligning on XRP. Looking at the trend lines here, wick fishing around these zones. If we push a little higher, we break this counter trend as well, we come back and retest, bang, we will continue to our final downside targets. And it's really as simple as that. There isn't too much to elaborate on as it hasn't changed too much. I'm just giving you a fresh outlook and to show you even further why this bias is still looking pretty valid, to be honest with you. So putting all of this into perspective and going over to BTC one last time as well, BTC has seen some pretty interesting price action. And looking at this trend line, exactly the same as the others, it's all just correlating. And seeing this weakness over here as well, if you want to look for any potential wick fishing and where to maybe understand where stop loss placements could be, let's brush this up very quickly as well. Do not need that, do not need that. None of this mess. And again, just showing you when it comes to Fibonacci's as well for crypto, you do not need to have so many levels, because regardless, no matter what happens, it's normally the 61.8 and the 78.6 that come through anyway. Even the 0.5, we don't really need that. That's more for Forex and stocks. And only in very rare occasions does the 0.5 actually come through as a reality. Even though if it does actually align with this key level, we already know the key levels there. So we do not need the 0.5% retracement, because I've normally 99.9% of the time given you a key level that correlates with that region anyway. And I do not even need to look at the Fibonacci to know that this is going to be a rough estimate of where that intraday level will be. So even when the fib fulfills at the 0.5%, it's very likely there'll be wick fishing higher to these zones anyway. So you might as well disregard that zone, wait for price to actually hit a region where it's at the peak of its movement. Just as I waited for this, there was no Fibonacci really on this setup. It's simply by knowing the key levels. And that's why when it comes to indicators and all of these extra things that people add to their charts, it's not needed. It's just an extra confluence with Fibonacci if need be. Even the moving averages, I do not really use them anymore, only in rare exceptions. All you need is the trend lines, the key levels, and an understanding of candlesticks and market manipulation. It's as simple as that. It does not need to be complex, and what you will see within the platform will shock you when there's a very specific chapter that will completely turn everything you know about the markets upside down around. You will not believe what you are going to see in that specific chapter. It's going to revolutionize your trading. Again, I do not even show this publicly. It's what I do on my personal charts. What I show you guys is simply the front end, but my charts on the back end actually look very different, and that's how I calculate these calls. And I'm going to be revealing all of that within specific chapters as well. So it's all there in the open. I do not care about giving it out there. If the market dynamics change because everyone starts trading like this, then by all means let it do so. I spend more than enough time on these charts to find a new market dynamic, to find a new strategy. That's one thing you have to realize as well. Your strategy will always have to improvise and adapt and grow over a certain period of time. The same way the market goes from trending bullish, bearish, or consolidating, your trading strategy also has to be adjusted and moved in the market. This can be very hard for many people, and something that in the beginning of your trading career you will not understand how you have to shift your trend line analysis, how you do your key levels. Everything you do has to be adjusted slowly and surely over time, because the market will eventually stop reacting to certain patterns, to certain levels, and it's up to you guys to identify that. But the beauty is I'm here to do that for you. You do not need to worry. If the market starts changing, we change our strategies. It's as simple as that. It's never going to be complex with me. I'm going to ensure you're all picking this up as easy as possible. Many of you have said the new videos, you're finding them a lot easier to understand and digest. So the easier I can make trading for you all, the easier you are going to make money. It's as simple as that. So to finish off this Wizard Wednesdays and to actually summarize, guys, the trades are going well right now. Keep your stop losses in profit. Stop losses should be around here, or just below 8.5. Depending on where you enter, just put them at break even. If you get wick fished out, we'll be providing extra opportunities to enter. XRP, understand that wick fishing could occur up to around 0.266. If you do not want to take the extra risk, you obviously can leave your original stop loss at the regions given. Same for BTC if you really wish. But for me, we've captured the bulk movement. This is simply a bonus trade. And all we want to do now is just wait. All we know is no matter what happens from this critical point, there is going to be a huge movement that follows. I would much rather see the downside regions come through, and then we begin understanding that the bull run will be happening from that point onwards. Now, I do not mean it's going to hit and it's going to just blow through the roof and start rallying. Although if we do hit that 16,000 target by the end of the year, that is exactly what will happen. But regardless, all I know is if these levels are fulfilled within the next week or two, or by the end of October, then from these points onwards, we will begin reversing slowly but surely, breaking through these levels very elegantly, very organically, and then the bull run will begin kicking in as the capital begins shifting from the institutions as well. Looking at this now from a very intraday level, just to show you a little example of what could be going on here, just drag that down for a second, down to there. I should have locked that, but doesn't matter. You can see we've broken below yet again another crucial region from an intraday perspective. We've broken above, retested broken support as resistance. We're now wick fishing at this zone exactly around, there you go, over there. So now we're falling lower. It's working exactly as anticipated. Going over to the 4-hour chart, this now shows me precisely from an intraday perspective, this should very easily just begin plummeting to $7,800. So I'm going to leave it on that note. So hopefully by the time this video is uploaded, we do see a little bit more downside movement. But no matter what happens, please secure those stop losses. We're not here to be bold. We're not here to be egotistical. We're here to secure the stop losses and hopefully make another win. If you're in this trade right now, from the region given approximately, you should be in around 280 pips profit, give or take, or 275 depending on where you entered, maybe a little bit less. That for me is a phenomenal win already from a single trade that was given following another trade. If you go over to the 1-hour time frame here, we caught this exactly from there. Remember, we entered XRP first. Following the wick fishing, you should be in around right now, around 80 pips profit. So it's not as much as BTC, but it's already made up for it with the BTC call as well. So that's why with a bit of patience, you wait for it to come through, you've caught a phenomenal entry, and that's why you can afford to put stop losses in break even. Because when you capture these moves, this is why I wait for those manipulative movements. When you actually wait for this, and you capture it from the very peak of a movement, you can afford to put the stop loss in break even, because if it gets wiped out, as long as you accommodate for the fees, spreads and commissions, you should be either zero loss whatsoever, or maybe like £1 or £2 or dollars loss as well, which is absolutely nothing compared to, you know, the profits you'll be making off these calls. So always understand as well, the amount you risk, no matter how good a call is, no matter how good a setup looks, please do not risk more than 1 to 3% of your capital. I do not want to hear that you've blown your account taking one of these setups if they've gone right or wrong. Some people, they can even have, you know, losses from a trade that went right simply due to incorrect mismanagement. If you're risking 25 to 50% of your capital here, then you have very little room for price to go against you. But if you've captured a huge movement from 10,800 down to 7,700, you've probably at least doubled your account size, or you've made a phenomenal amount. You've made 10-20% compared to the 1 to 3% you've risked. Now, it's in your best interest to just keep on making small 1 to 3 or even 1 to 20% wins with these calls that are given, instead of trying to continuously go for quick flips. It's all about outlook. It's all about being sensible. And I promise you, if you follow these guidelines, I will make you all incredibly wealthy.